Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Tuesday, July 24th, 2012, and here's today's market wrap-up report. Well, ladies and gents, if you had a bullish bone in your body from yesterday's 16-point rally off the lows, then today's consistent selling pressure should have reminded you that we are not out of the woods yet and that the bullish bone you had is probably broken. The indices were not able to sustain any bounce today until the close when the news came out regarding the Fed. The Dow Jones was down 104, the Nasdaq was down 27, and the S&P 500 was down 12. There were a lot of movers and shakers today, as always, but there are two stocks that I want to highlight, which are UA and Baidu. Both of them reported earnings. Baidu had earnings yesterday after the bell, and UA had earnings this morning before the bell. What I wanted to highlight was the fact that UA and Baidu both pulled back pretty nasty off their highs, possibly putting in a short-term top in what we know is a strong stock on the UA standpoint, and Baidu giving bag holders a chance to exit. Now, before I go over the market charts and a few key stocks, I wanted to read the article from the New York Times that came out regarding the Fed near the end of the day there. Okay, this article is from the New York Times article states a growing number of Federal Reserve officials have concluded that central banks need to expand its stimulus campaign unless the nation's economy soon shows signs of improvement, including job growth. The question is expected to dominate the agenda when the Fed's policy-making committee meets next week, with some members pushing for immediate action while others seek to postpone a decision at least until the committee's next meeting in September, so they can see a few more weeks of economic data. Makes sense. So we'll see what happens there. So once again, this is back on Front Street. Not that it ever left, but you have to keep this in mind now because you do not want to fall a victim of a rip your face off rally, like I love to call it, on any random day going forward. All right, so let's take a look at the charts here. Starting off with the ES, you can see we broke the little upward channel today. All right, and we have our first confirmation close below that key 1330 level here. We actually closed slightly right below 1330. We closed right here at 1329.75. However, going forward, if we hold below 1330, which is the range that we were trading in for the past 4 weeks or so, after we double topped last Friday, we hold below 1330, then this could definitely be a development of kind of like a little rounding top. All right, that's forming off of this little head and shoulders pattern that we had. That's forming off of this other little kind of rounding top that we had right here. Okay, so let's see how this sets up. In my book, I would have to say that holding below 1330, I now remain a little bit more bearish, all right, than just neutral, okay, because that's a key level that are on a lot of traders' radar, 1330. We still have support from the 200-day moving averages, the simple and the exponential around this 13 area. So then you will have to say, okay, if we start trading below 1300, then it's definitely signs that we're going to have some serious selling coming in this market back down towards 1260. But first, we have to get there, and 1300 is the next area of support that I'll be watching, along with these moving averages right here around the 1315 area. Back to the top side, if we do decide to get a little rally tomorrow, I'll be looking for it. I'll be looking to see how the buyers and sellers react around this little trend line right here, which will kind of be like the back touches of this upward trend line that we broke. Excuse me, trying to talk too fast here. Okay, so 1338 is the level from the bottom underneath area of that trend line. That will be an area that I'll be watching tomorrow at the same time. All right, holding below 1330 and taking out this little pivot low that we made right here on July 12th, right here at 1319.75. Just call it 1320. All right, will have me lean even more bearish, expecting that we come back down here towards the 1300 area, which looks like the most relevant area of support that they could take the market, which is about 23 more points to the downside. Okay, now let's take a look at some other. Let's take a look at the dollar. I want to go to the dollar real quick here. All right, the dollar in the weekend video video that we did on Sunday with a live session we had Sunday night, I highlighted how the dollar was pulling back this little key trend line, and you can see from the yellow ovals that I have here highlighted. All right, last Friday, the dollar staged a perfect rally, right, off of the break, back test held, and now we expected that dollar strength to continue going into this week, and so far that has happened. It's going to be very, very interesting to see if we break the top of this little upper key trend line of resistance right here, because that could take the market definitely into a nice, explosive move to the upside in this little dollar, and that is definitely not going to bode well for the commodity sectors, the basic material sectors, the energy complex, and of course the market. All right, let's take a look at the euro. The euro is making new lows. All right, new lows for the year here. And that's definitely, that's definitely have a lot of has a lot of people worried, and that's definitely what's causing the dollar to go up there. So keep this on watch as well. It's just, it's in a strong downtrend. If we take a look at the weekly time frame, the euro doesn't have support until down here around the 1.187 area, which is the lows from 2010, which means it still has more downside before we can expect maybe some people to start covering, or maybe some buys to try to come in to support the euro. Okay, let's go back to this daily chart. I want to take a look at the Qs real quick here. Triple Qs. Okay, triple Qs were not able. Let me take off these studies here so you guys can see the chart a little bit cleaner here. And let me take off this little price levels as well. Okay, so the Qs were not able to break back above this little upward channel that had broken. All right, we had these we had a couple attempts to break back in the channel that failed. You say 1, 2, 3, and the fourth one happened last week. And now, of course, the Qs are right back down. Qs are going to have some support. They have a gap support down here around, say, the 61.75 area, 62 area. And that's about $1 to the downside. So we do have some continued selling tomorrow, which I believe we will, because Apple reported earnings after the bell. And if I take a look at the Qs right now, what level they're at, the Qs already are at 61.96 as they sold off after hours off the Apple news. And that is a heavy component in the NASDAQ. So Qs are already at 62. That means that we should be opening up somewhere down this area right here, which will mean that my target will probably most likely tomorrow, if we continue selling, will be around this little gap fill support around here around the 61 area. Okay. But in essence, the markets aren't looking good, and we had two key reports from Netflix and Apple, which shows us that consumer spending is starting to slow down, especially in some of these little specialty products such as Netflix, being able to watch movies and in front of your own screen, which some will consider a luxury, and then Apple, just these expensive products. So let's take a look at the IWM here. Then we'll take a look real quick at Baidu and UA and Apple. All right, the IWM, all right, has broken this little upward channel. IWM was the first sector showing weakness. Okay, as I highlighted in our chat room all last week, I was highlighting how that Russell wasn't bouncing at all and showing more relative weakness to the other indices. And of course, that's the sector that you want. That's the index that you want to short for when the market broke down. And very well, TZA was off to the moon today. Russell ending down $1. Russell ending down $1 and some change here, being down 1.31%, and then TZA up 3.89%. Definitely a ETF that that everybody should have been participating in today if you would have recognized that Russell weakness last week compared to the other indices. All right, so anyway, let's take a look at UA, Under Armour. This was a great stock that I called out in the chat room today for the long side. All right, stock opened up pretty well. Just had tremendous strength until they sold it off after hours. One level that I was telling the traders in the chat room to watch it was around this 54 area. Okay, and once it started holding above 54, all right. Of course, if you didn't buy the open on it, once it started holding above 54 and it gave this nice little pullback pattern, and we recognized the strength in the tape, we were just buying shares right here at 54. I believe about 54.29. I sold 55. Not the bulk of the move, of course, because we didn't buy the open. We waited for it to show us that it wanted to hold up there, and it gave us a nice little pattern to trade off of, and then gave a 15-minute buy signal right here around this 10:45 time frame. Another stock that was pretty interesting that we called right off the open, all right, was the Baidu. Let me delete these drawings here real quick. Was the Baidu. Baidu, had all these moving averages, right? Had the 50-day simple and exponential right here, which gave a good catalyst for it to propel to the upside once it started showing that buyers were holding the bid right above those moving averages, which was around the 116.80 area. So, but also provided a great, nice little move on the open for the cash flow. Whether you traded on a 5-minute breakout or you traded it on a 2-minute time frame, which is the time frame that I use right on the open. All right, on this little pullback right here, in this little big bar, gave a nice little buying opportunity right here, right above 115. So, I wasn't able to write it for the full 120. I actually rolled the stock for about a point and some change here, but that was also a good call out that we made in the chat room today. All right, so let's take a look at Apple real quick, and I'll close the video out with that. All right, Apple and Netflix reported after the bell. They both sold off pretty hard here. It's not looking good, and like I said, that's definitely going to cause some selling pressure in the market. But now at the same time, we have to worry about the Fed coming out with the news, close to the end of the session here, that there may be further stimulus measures, which of course is something that most professional traders have been talking about regardless anyway. So it really doesn't matter. We still have to be cautious about getting that one news on the day where the market's looking like it's about to fall off the cliff of the face of the earth, and next the news comes out and the market just spikes up off that news. So just got to be careful shorting this market now with that news coming out today, which has always been the case anyway. So let's take a look at Apple. Apple's gapping down around the 570 area, I believe. It's at some support down here. If it wants to sell off, the stock could very well be at 560 or even yeah, 560, 550 tomorrow. Who knows? I mean, just gotta watch the stock, but just know that it's gapping down, and it's so far after hours it's holding in the support area around the 570, 569 area. All right, so I hope you guys enjoyed the video. Make sure you keep Under Armour, Apple, and Baidu on watch tomorrow, and Netflix, as they will all be in play. Make sure you get your key levels on them. If you want to find out what some of those key levels are, make sure you come join us in our chat room. To sign up for our chat room, you can go to wallstreettrading.com and fill out the little form on the right hand side of the page for our 14-day free trial, and you can see how we set up in the morning and prepare our traders to attack the markets. So I hope you guys enjoyed the video, and I'll catch you guys in the war room tomorrow. Make sure you subscribe to my Wall Street TV channel on YouTube to watch this video if you're seeing it from a different source other than YouTube, and make sure you follow us on Twitter and Facebook. To find that information, go to wallstreettrading.com. Have a great night, guys. This is Channel Guy Trader signing out.